Hey guys, welcome back to the channel. If you're new here, hi, my name is Jess, and as the channel name suggests, it's all about crypto, trading, and technical analysis. So if you're all about that, we'd love to learn, hit the like button and subscribe to the channel. So today I'm going to go over the macro charts on Bitcoin. Of course, we've got our yearly candle close to 2023 happening in just a couple of hours and a massive year ahead planned for 2024. Starting with the ETF deadlines due in January, as well as the predicted halving event for April. In this video, I'll go over what signs you should look for on the macro charts as well as the short term to signal the bull market and whether or not we'll even have one. Okay, so diving right into the video, guys, we're going to start with the macro charts, and I'm going to give you guys 3 signs that I look out for a confirmation of the bull market. So of the 3 signs, 2 of them are leading or real-time indicators that the bull market is happening or about to happen, and the third one is a little bit more of a lagging indicator that's going to tell me that we're actually seeing the surge in volatility and momentum that we look for in a successful bull run. So let's start on a weekly chart here, and I'm going to load up the Gaussian channel indicator. So for those of you who don't know, the Gaussian channel is kind of like a trend indicator. I can pop up some background information somewhere on the screen here, but basically, there's a couple ways to use it. You can use it for very long-term trading or investing if you do want to. Some people like to use it in terms of when the price enters the Gaussian channel, sell or like / short, and the entrance of the Gaussian channel is generally a positive indicator. For what we're looking at today, though, just specifically in terms of the bull run and the macro Bitcoin price action, we're looking for a sustained break above the Gaussian channel and a hold on a weekly chart. So what I mean by that, I'll expand a little bit. Oh, actually, let me quickly first explain what the chart means, like what's going on here. So green is the halving event. I've just quickly marked all of these out. The red is the bear market, and blue is that accumulation phase that we're in right now. And so these are all the historical dates of those halving events and the subsequent bear market and accumulation phase. So let's go back all the way to 2012 and have a look at what happened here with the Gaussian channel. So we were in a bear market and we broke below back into the Gaussian channel accumulation phase where we were in the Gaussian channel still traveling upwards, and then we had our break above, and our sustained break above led to eventually our bull run. So as you can see, it predates the bull run pretty early as well, but in some cases, for example, here in 2020, we saw a break above the Gaussian channel and an actual fake out. So we saw it break back down into the Gaussian channel and actually below the Gaussian channel before a couple months later, we had our sustained and real breakout. So as you can see, it's pretty important to look out for in terms of a bull run, because if you were to look for it around here, you would get absolutely wrecked. What you look for is a proper and sustained break above. Let's have a look here in 2016, we had again break back above into the Gaussian channel, and it wasn't until we sustained a break above that Gaussian channel that we had our bull run. So let's have a look at what's happening right now. We are in fact above our Gaussian channel right now. We entered it actually since October, so entered above it, in October, which if you watched the previous video, it was a 65-day uptrend. We have since broken it, but hopefully we still maintain above this level, and as long as we stay here until April, everything should be looking good in terms of this indicator for the bull run. Okay, so now that I've talked about a leading indicator that's going to tell us before the fact whether or not we're going to have a bull run or whether or not everything is lining up towards one, let's have a look at a real-time indicator that's going to tell us right now whether or not we've actually reached a price level that will trigger a bullish move and a sustained bullish move. So what I've marked out here, these horizontal levels, are what I like to call a dead cat bounce level. And so a dead cat bounce is basically a small temporary upwards move in the midst of a huge downwards move. You can see it here happened in 2015 and again in 2018 and here in 2022. So we have our peak after the bull run, have our peak, we have our downwards move, that temporary surge, so our dead cat bounces here, and then a rejection from that level, and then a continuation downwards throughout our bear market and a little bit into accumulation here. We have our accumulation, a bounce above, bounce to touch, that dead cat bounce level, a rejection, and then that proper sustained break above that historical price point leads to our bull run. The same thing happened in 2018, so we had our bear market, our little dead cat bounce, continuation of our bear market, and it wasn't until we had a little fake out here, we sustained a break above it here, and that's what triggered our bull market. So as you can see, our dead cat bounce level is a pretty important historical price level. Same with 2022. We had our dead cat bounce level. It was 2 candles that bounced to $48,000. And here we are approaching that current price level. That is our next level of major macro resistance. So that is, to me, what would indicate that we have definitely reached a price where a major bullish trigger will occur, and we're likely to see at that huge surge of volume and price coming into the volume and momentum coming into the market, right? So there you go, $48,000 is another level that I'll be looking out for, another indicator to me, this dead cat bounce level that we are entering a bull run. All right, so we've got our leading indicator telling us before the fact whether or not we are lining up for a bull market. We've got our real-time indicator letting us know whether or not we've actually even got the historical price behind us to tell us that we're in a bull run. And this final indicator is a bit of a lagging one, but you might be asking, if we know beforehand and we've already reached a price trigger, why on earth should I even be looking out for this lagging indicator that's going to tell me afterwards whether or not we're in a bull run? And well, if we have a look here, so this lagging indicator is the Ichimoku cloud, and specifically just the base and the conversion line. Our fake outs that happened in 2019 in this little area here in accumulation where everyone thought we were in a bull run. This was the level of the dead cat bounce. It bounced above the dead cat bounce level. It was above the Gaussian channel. What we don't see here is our conversion line crossing above our baseline. And that is why this indicator is so important to me, that we're actually in a confirmed bull run. So our baseline and conversion line, they are 2 lines on our Ichimoku cloud indicator. I'll quickly show you guys what it is. So these are the 2 lines here. That's the blue conversion. I've made it like 2 points just so it's a little bit thicker so you can see. Baseline as well. Then we've got a lagging span. That one's a little bit of, as you can tell, like a lagging kind of moving average. And leading span, the 2 leading spans create a cloud. Same with these 2, but specifically today we are just focusing on the base and conversion line. So both of these are some forms of moving average. They're not exactly, but it's like the best way I can really simplify the description of them. And the conversion line is a shorter term version of it, right? So it kind of is more impacted by the more localized volatility and price trend. So a conversion line crossing above a baseline is a very bullish indicator, and a baseline crossing above the conversion line, conversely, is a very negative indicator. So let's have a look at the historical price action on Bitcoin. In 2012, let's start the start again. We have our bull market here. This is the bull market trigger, that halving event that happened on the November 2012. We have the conversion line still sitting below the baseline, and it wasn't until about 2 months afterwards, we're on a monthly chart, that we had a proper crossing of the conversion line above the baseline, and it remains above the baseline the entirety of the time until accumulation. So the whole point here is to know that we are at least getting this cross. Obviously holding above is pretty important, but I wouldn't really wait for a crossover to sell because it happens well after the peak. So it's a really good indicator for whether or not things are going well, or things are, the price is moving upwards. I don't personally use it for anything like shorting, just because it is a lagging indicator. So yeah, this is really important because, again, if we look at 2017, 2018, this kind of area, before we had our bull run, we had all these other indicators telling us, the Gaussian channel, that dead cat bounce level telling us that we were going to be in a bull run, and our conversion line was still sitting below. So we were sitting below all the way up until October 2020, and we had our bull market trigger in May 2020. So it was a couple months afterwards. And as you can see, that's actually when we get that huge surge in volatility and volume in the market. If you have a look at the trend line here, it's not that steep, whereas the proper bull run is characterized by this really steep uptrend. So that's something that I'm looking for here. We have not seen it yet. Same with that $48,000 range that we're looking for. Where is it? 48. Quickly mark that out here. Yeah, so we are not seeing it yet, but we do have a couple of months. Let's have a look. We've got all the way, if we were to be spot on for April, we have around 4 months, right? And if we are a couple months late, which we usually are 2 months late, we've got 6 months before we see that proper, breakthrough, or we're due for a proper flip of these two lines.
Alright guys, there you have it. So those are 3 indications to me that we are either approaching or in a confirmed bull run. Now let's really quickly dive into the short time frame price action to see what we would be looking for a yearly candle close for 2023.
Okay, so this is Bitcoin on our 4-hour chart. It has been so boring, but as you can expect, because it's like the Christmas holiday season and the markets don't move as much during this period of time. So for the last 20 days, we've been developing somewhat of a parallel channel. Let me just quickly draw that in to show you guys. So this is the top of that channel here, this horizontal level of resistance, and this sits at 44.3K. This is a pretty important level. We've been in here for nearly a month now, and it's forming a very strong level of short time frame horizontal resistance. And this is the parallel channel here. We have not really had a retest in a while, which leads me to believe that we might actually be developing this upwards trend line here with these 3 points. Obviously, there's a little bit of deviation here, but that's just normal. And so the ascending trend line and this horizontal level of resistance, which is still remaining very strong and clear, is creating a little bit of an ascending triangle. So an ascending triangle formation, we've previously seen this when we were approaching our last level of major macro resistance, and that was when we were trying to break above $38,000. So we did end up breaking above it because an ascending triangle is a bullish pattern. It has like a 65% chance of an upwards break compared to a downwards break. And basically it's characterized by weaker or weakening bearish pushbacks when we try to push past a horizontal level of resistance. So there is a fair bit of deviation above here, but since we break back down, and also because we know that 38K is a definite horizontal level of resistance, it was pretty clear that this was an ascending triangle. And so we're developing one that's pretty similar here, and hopefully this is the triangle that takes us above, or this is the structural pattern, sorry, that takes us above our next level of major macro resistance. And if you guys remember from just before when I was talking about the macro Bitcoin price action, we're looking for a break above that level of $48,000 to trigger that bull market. So let's have a look at our measured move here. Price range. So take the second retest of the top end of this structural pattern down to the bottom, and that's about that much. Let's drag it up. Oops, sorry. Let's drag it up, and that takes us well above to 48,400. So if we do have the measured move, it's not 100% accurate. Obviously, I can imagine if we break above 48K, we might have a huge surge of volume and volatility, and that might take us, close to our next level of resistance at 51,000. So maybe we'll see that, or maybe our measured move will take us just to touch this level and we might reject, because as we previously saw in that dead cat bounce level retest, we do reject, break back down a fair bit before we do another retest and break above to sustain that bull market. So maybe that will be what happens here. So in terms of the yearly candle close, what we're looking for is essentially at least a continuation of this trend line. So if we have a yearly candle close that is above this price level, these price levels here, and above this diagonal trend line, that will tell me that at least we are still consolidating within this structural pattern, and that we will potentially see a break upwards later on. However, obviously the most positive, yearly candle close would be one above this $44.3 thousand level. And really quickly, I do want to talk about how important it would be for us to retest this 48K level before we break below. So there's a 35% chance that we break below the structural pattern and we retest maybe lower levels of support, probably around this level here at 40,500 or $40,000. So if we quickly go on to a macro Bitcoin chart again, sorry, going back to the macro, this is a weekly chart. And the problem with us not touching this $46,000 to $48,000 macro resistance range and breaking back down to retest $40,000 or even $38,000 is that it would tell us that this entire move here is nothing but a deviation. So if it's not a real move and it was nothing but a deviation, it tells us that we're more likely to break below and back into this next level of support at $36,000, because if it's just a deviation, we haven't actually broken above this level of horizontal resistance, right? So if we haven't actually broken above, what's the price most likely to do? Test the next level of local resistance, and that is at $36,000 to $34,000. So hopefully we don't see that, but those are the two scenarios that we'll be looking for that yearly candle close. So either a sustained move within that structural pattern. Where's the chart? Structural pattern here, this ascending triangle, or a close above, or, you know, hopefully not a break below.
Okay guys, I think I'm going to end the video there for today. So I covered the macro charts as well as 3 indications to me that we're going to have a successful bull run, as well as the short time frame price action and what to look for that yearly 2023 candle close. As always, I'll pop in the links for my trading view so you guys can chart along if you would like, and BingX and Bitget, which is where I do my trading. If you guys want 15% off your fees, you can sign up down below. I've also got a free Telegram channel if you guys want daily Bitcoin updates as well as news commentary and you like any of my other content. But that's everything else I wanted to say. I hope you guys had a really great Christmas, Happy New Year's, and I'll see you guys next time. Bye!